Amazon has reported, so has Intel, and we have some big numbers here. So let's look at Amazon first. 31 cents earnings per share versus 22 cents, $127.4 billion versus $124.55 billion. That is a big, big hit. And right now we're seeing Amazon is up 11%. So flipping through the Amazon press release, net sales increase 9%. Wow, 9%. And guys, this is coming off of, and I'll look at the revenue here in a second, but this is coming off of when they were high flying off of COVID. And the question for me was always, okay, does everything that they're doing on the shipping side and going at things with their little projects here and there, is that going to sustain itself? Because we know Amazon Web Services carries a lot, but will the rest of it increase? Net sales increased 9%. North America segmented sales increased 11% year over year. International sales increased 1% year over year. AWS, this is the big one right here, increased 16% year over year. That's a big one right there. All right. Operating cash flow increased 38%. That's a big number because they were always in that weird situation of, are they going to be able to increase this cash flow? Can they? At what level are they going to sustain cash flow and leave it there? Let's continue on. Obsessing over the customer experience. And I listened to a sit-down talk with Jeff Bezos, who's of course no longer CEO, but their big thing is obsess about the customer. And it was all focused on the customer. And that's kind of the ethos of Amazon. Focus on the customer, give the customer what they want, maybe to a fault, but that's the big thing. So focusing on the customer, continue to delight customers conveniently. Nearly 26 million customers ordered items with same-day service in the quarter, an increase of 50% compared to last year. I just ordered a new wireless Ring camera today. I ordered it in after 12 o'clock today, and it arrived at my house at 2 p.m. So that's pretty cool. Launched a new fulfillment center by Amazon. Capacity management system to help sellers who use Amazon, storage, packing, etc. And this is another big thing that they're going towards, and they're also going towards these in a green way. They're trying to reduce their carbon footprint or whatever. All right, acquired One Medical. This is a big thing because they're starting to get in that healthcare space, and you also know that they are doing their own pharmacy to try to compete with other drug companies in that space, maybe not really drug companies, but more of a Walgreens and Mark Cuban's Cost Plus Drugs, et cetera, a primary care organization offering 24/7 virtual services. So I think this is a direct competition to CVS, Walgreens, and those health hubs that they're doing. And these guys are focusing more on mental health. Prime Video will exclusively present its first ever Black Friday National Football League game on November 24th. That's pretty cool. They set record box office records with Creed 3. The movie grossed $100.4 million globally on opening weekend. A lot of good things here. I'm not seeing anything bad. Let's see, investing on behalf. I'm looking through this for the very first time. I'm trying to see empowering employees. Plans to spend $200 million on safety technologies. That's cool. I guess the union stuff comes into question here when thinking about them. Environment forward guidance. Net sales are expected to be between $127 billion and $133 billion, and to grow between 5 and 10% compared with the second quarter of 2022. Guidance anticipates unfavorable impact of approximately 30 basis points from foreign exchange rates, so they're in the same boat as everybody else. Operating income expected to be between $2 billion and $5.5 billion compared to $3.3 billion in the second quarter of 22. To me, I'm looking at this saying, wow. What's bad about Amazon right now? And you can tell they're up 9.45%. They started out 11. Now, coming to the revenue side, look at these big jumps. 232 billion, 280 billion, and then 386, 429, 515. So when I do my stock analyzer on this, I have to say to myself, are they going to be able to sustain these levels? That's really what becomes the question. Let's briefly look at 8 pillars. Then I'm going to stand up and go show you what I did in Stock Analyzer. So, decent return on invested capital, diluting shareholders, lots of debt. No surprise there with the way that they're going at the shipping businesses, et cetera. Crazy overpriced. Cash flow, like I told you earlier, is not really there. Let's see what the analysts say. Analysts see revenue side maybe mid-teens, low teens. Earnings per share side is absolutely huge. Absolutely huge. And I'm sure a lot of that goes to Amazon Web Services. So let's go to Stock Analyzer real quick. So I put some numbers in here for Amazon. I'm going to stand up here and go to the board. ROIC is I'm very underwhelmed by their ROIC, but I think that could change over long periods of time. Revenue growth, I did 5. Yes, that's low, but recessionary environment, things start pulling back, who knows? 8% middle ground, 11% I think is very high for the next decade, seeing as where we are in our kind of economic cycle. But let's see where it goes. Profit margin, I kind of ran the gamut here. Profit margins will increase if AWS continues to do what it's doing. So I went 2, 4, and 6. Free cash flow margin, always lower for them, 1, 3, and 5. PE, this is the crazy one, and I could probably go a little bit higher, but I did 16, 17, and 18, and right now it's currently like 75 or something. Same thing for price to free cash flow. Desired return, because I beat it up so badly, I put 10% here. I did 14% because I think that's a lot, and I think that's a lot. Let's see what we have here. Yeah, I'm not surprised. It's on my watch list at $55. This is ridiculous. $9 to $17. 67 to 56 and 30 to 40, watch list 55. To me right now, guys, this is in the too hard category. This to me is just too hard of an investment to figure out, too hard to see which direction they're going. We had this conversation on a live stream today. I think that what they need to do is stop taking these little bets and these 7-year bets and saying, let's see if this works, like Amazon Alexa, maybe their movie service, etc., and really focus on, I don't think they're the company that's in that growth stage anymore. The only part of that company that's still in the growth stage, Amazon Web Services. Other than that, stabilize things. Start driving earnings per share. Start going and helping your shareholder instead of trying to be this growth company that's already at almost $2 trillion valuation. It just doesn't make sense to me. All right, let's go to the next one. Let's go to Intel and see what we have going on here. Is it almost, okay, $1 trillion valuation. And you could see, look at this, 9%. 9%. All right, Intel. Whoa, that changed. This was up about 4% right after. Let me do a refresh here. Wow. So they are down 2.2%. Guys, listen to these numbers. They were expected to lose 16 cents in earnings per share. They only lost 4 cents. They were supposed to drive $11 billion in revenue. They drove 11.72. So that's a beat on top and bottom line. Wow. Okay, and this is why, those of you that trade, this is why you don't trade earnings. You don't look at this and say, oh, yay, they beat. Yippee, we're going to keep going. And guys, before I go on with this, I want to mention, we've brought back the $7 for 7 days. Come and try the software. I'm walking you through Stock Analyzer tool. We're going through all of these different things right now. We go through the 8 pillars. $7 for 7 days. Try it out. You're going to love it. You're going to get the community. I have 2 notifications right up here. I'm sure people are starting to talk about Intel. So let's go here and look at Intel's quarterly earnings. Have not looked at them yet. Revenue came in at $11.7 billion, down 36% year over year. Not surprising. Everything that they're doing as far as trying to become a foundry in Columbus, in Arizona. I know they have something in a different country, and the country is not sparking its name right off the top of my head right now. But people probably don't like to see that. That's one thing. Okay, let's continue on. All right. Highlights. Intel continues to be on track to meet its goal of achieving 5 nodes in 4 years. 2 of the 5 nodes complete. Intel 7 is high manufacturing, yada, yada. I'm not going to get too far in the weeds here with their stuff. I would really like to see what the progress is of their buildings that are in Arizona and Columbus and becoming the foundry and the plan going through 2025. Pat Gelsinger was on CNBC. I believe this morning he did an interview. He'll be on the earnings call later tonight if you're interested in listening to that. All right, let's see. Business outlook. They're expecting to do somewhere between $11.5 and $12.5 billion. The gross margins, I'm going to go here, 37.5. Tax rate, I don't care about. Loss per share. Okay, so they're going to be talking at 5 p.m. That'll be something interesting to listen to. I'm probably not going to listen to it, but it'll be something interesting to listen to. Let's go here and look at Intel. So now it's down 2.1%. Before I go any further on Intel, you need to make sure this is a turnaround situation. This business is really trying to reinvent itself. So if you're the person that's going to look at the numbers that maybe come out in Stock Analyzer and they're really good, understand that you have a long way to go here. This is a big time turnaround. This is a big time bet. And something that Charlie Munger said in an interview that he did with Becky Quick about Intel, government's going to be throwing a lot of that money at them because of the CHIPS Act. He said, none of that is set in stone. None of that is guaranteed that it's going to be coming to government. So I personally think these guys are spending like crazy. And I'm worried that they're putting too much of a reliance on the government, saying, hey, we're going to get this money. Maybe no, you're not guaranteed that money. That money could easily go to somebody else. So you need to have your precautions when you go in thinking about Intel before you go in and just say, hey, this is a great value, I'm going to go buy it. There's a lot of things to understand in here. Honestly, I made an investment in this company prior to any of this foundry and all of this stuff. This to me would be in the too hard category right now. If I was starting and I was looking at this for the first time today, I would be moving on. That's just my personal opinion. But let's see what the 8 pillars say. I'm sure they're pretty ugly. Revenue growth is not there, of course. Net income growth, not there. I'm surprised cash flow growth. Oh, no, free cash flow is not there. Let's see. Debt is a tough one, guys. Let's see what the analysts have to say. So you can tell. Look at this drop off. 44, 40, 11, and 3. That's only 3 years out. People are just unsure of what's happening here. They see earnings per share growth. We'll see. I mean, I don't know how much worse they can get. So maybe that's the kind of the direction that they're going. On the revenue side, there is big revenue growth, especially into 2025. And that's when the foundry begins really producing. So let's go to Stock Analyzer. Stock price is down right now, 2.28%. All right, I'm going to put these numbers in. They got deleted. Intel, revenue growth. Let's go. This is out 10 years. And remember, they're in an interesting situation right here. Let's go 1, 4, and 7. 7 sounds crazy, but if they get it together and they become that boundary where other chip companies have to go, they could do very well. Profit margin, this is kind of all over the place. Let's go with 9, 12, and 15. I wonder if they can get back to that 20-some% revenue growth. You know what? Why don't we go 9? Man, this is a tough analysis. 14. No, that's, yeah. You know what I'm going to do? I'm going to do 10, 15, and 20. How about that? We'll kind of run the gamut. Free cash flow margin, I'm going to do the same thing. I think that those should match up over a period of time. 15, 16, 17, 15, 16, 17 for price to free cash flow. And I'm going to go 12, 14, and 16% return here. And why did I do that? Because there's a lot of uncertainties. I think it could be argued that I can go even higher with these things. So let's see. $17 on the low end, $43 on the high end, and $29 in the middle. Guys, this is a very tough one. This is a very, very tough one. I personally, like I said, this would be in the too hard category for me. But if you know something and you believe in them and you really want to dig in the weeds, I think this is a great company to look for. Guys, subscribe to the channel. We're going to be doing more earnings next week. We have Apple coming out, AMD. Subscribe to the channel. Watch for the earnings alerts. Watch for our other videos too over the weekend. You guys have a good one.